Now, JPMorgan earnings are coming up on Friday before the US Open. Now, seasonal moves here are really quite interesting for JPMorgan. You can see in the middle of April from, April 15th through to April the 30th that JPMorgan sort of tends toward gains. But from a seasonal perspective, then heading from May into sort of the middle of October, you can see that there is a weaker period for JP Morgan and a 56% losing trade percentage with the average return of a 5.90% fall. Now, interestingly, analysts are expecting large US banks like JP Morgan, Citi, Wells Fargo, and Bank of America to announce customers withdrew billions of dollars in deposits at the start of 2023. So one area to watch closely this earnings seasons is for banks announcing what customers are doing with their deposits. So if customers withdrew more deposits than expected, that can reduce the bank's capacity for lending. However, analysts are expecting revenues to increase for JP Morgan due to continued expectations of an uptick in retail operations activity. But if there are some surprises in the amount of outflows from the big banks, the seasonal pattern could indicate a weak time ahead for stocks. And this could potentially weigh on JP Morgan's share price heading into the summer. Now, if you just take a look technically, you can see prices are just sort of sitting above that 100, 200, sitting below rather that 100, 200 exponential moving average. So there's some pretty stiff resistance just to the upside. Major trade risks. The major trade risk here, of course, is that the outlook for banks remains strong and inflows from the Silicon Valley Bank collapse offset the customer deposit outflows from the start of the year. Remember, don't just trade it, but seize an exit.